Okay, so hi everyone. I'm Danielle. I joined the Lone Soldier program of Nefesh B'Nefesh and FIDF about 6 months ago as the released Lone Soldier manager. The program has been around in the past 13 years, helping lone soldiers before, during, and after their military service. And over the past 6 months, we've been working on expanding our services, especially for you guys, the released lone soldiers, with the goal of making. Sorry, I'm so excited because it's my first time speaking to you guys, and I really appreciate you, so I'm very nervous. So with the goal of making it easier for you to adjust the life here in Israel, the civilian life here in Israel. Um, we are looking to support you in a variety of areas, if it's the bureaucracy, financial management, academic studies, employment, everything you basically need here to adjust the Israeli life. So before we get started, I just wanted to say that our team is here for you, and we encourage you to reach out to our team with any question, problem, or even an idea that can help you guys or others. I will put the contact information here in the chat, so feel free to reach out. And now for the subject that we are all here for. We know that the topic of taxes can be a bit stressful, so we hope this Zoom helps you feel a bit more calm and make things a bit clearer. And now I'm happy to introduce Yaakov, a tax attorney that kindly volunteered to lead today's session. So thank you so much, Yaakov, and good luck to us all.
Thank you, Danielle and Sam. It's nice to meet all of you guys. I am the director of individual tax, U.S. taxes specifically here at Philip Stein Associates. It is confusing being a U.S. citizen abroad. I wanted to kind of walk you guys through everything that you have to file, have to be aware of, how it all works. So we're going to start with the basics and then continue down from there. If you have questions, we have a Q&A button that you can click on and add questions in, and we'll answer anything. We're trying to keep this to a short hour, hopefully less, so we have more time for questions and anything else that we can go through, and you guys can continue to do what you are needing to do. So thank you all for joining. The first most important thing to note is that as a U.S. citizen, you guys are subject to taxes on your worldwide income, okay? And you are subject to taxes because of citizenship. So let's say you were born to U.S. parents here in Israel and got U.S. citizenship from birth, you would still be filing a U.S. tax return. Most of you, I'm assuming, who made Aliyah and joined the army. So because you are U.S. citizens, you have a U.S. filing requirement, assuming you meet certain criteria. Okay, and we'll go into what that is. But most countries outside of the U.S., almost all countries in the world outside of the U.S., is based off of where you are a resident. So because you are an Israeli resident, you might need to file Israeli tax returns, but because you are a U.S. citizen, regardless of where you live, if you live in the U.S. or live abroad, you might still have to file U.S. tax returns. Okay, so that is just crucial to be aware of in terms of filing U.S. tax returns. Who has to file? Citizens. Yeah, and there's generally two forms that you have to be aware of that are annual filing requirements. The two main ones are the income tax return itself, which is a Form 1040, which is that basically if you have income over a certain amount throughout the entire year, which is approximately $15,000 or around 50,000 shekel, then you have a filing requirement for that year of filing a tax return. Okay. Most soldiers that are in basic service, you earn less than that. You get funds in terms of housing and everything else, but the net amount or the gross amount that you're taking from salary is less than $50,000 for the year, and therefore you might not have a filing requirement. There are some years where there were benefits in the past, like during COVID, where people wanted to file anyway, and maybe if you add up all the benefits and everything else, you could say with just the Israeli army salary at a basic level, you might be able to say that there is a filing requirement again, but for the most part, it shouldn't be. Okay, but that's the first form. The first form is a tax return. We're going to dive deeper into it, but it is basically if you have income throughout the year, you are reporting that income, and potentially you could pay tax to the US on that income. And we'll go into why that is unlikely, but it is a possibility. Okay. The second form is a foreign bank and account report, or FBAR form, also known as a Form 114, if you hear that. But it is basically an informational report that basically says this is the amount of balance that you have in foreign accounts. So if I have a bank account here in Israel, a pension account here in Israel from the army, and I go over certain thresholds that we'll go over, then I have to report the balances in those bank accounts to the IRS or to the US government. It is not taxable. You will not pay tax on the FBAR form, but it basically just says this is the highest balance that each of these accounts had overall. So those are two very important forms to fill out, and we'll dive into each one a little bit more deeply. But the idea is those are the two forms that, being a US citizen living in Israel, you might have to file every single year. Okay. Um, the key deadlines for them is that the 1040, the income tax return, is normally due. There's an original due date of April 15th. Because you guys are outside of the US, you automatically have an extension till June 15th. So that is the normal deadline. And you can push it off further by filing a specific form. You can say, I'm not going to be able to file this by June 15th. Give me an automatic extension until October 15th. And you can even push it further till December 15th if you need. Okay, so let's say you're speaking to an accountant to prepare your tax returns. If they tell you like, oh, we haven't filed your tax return yet, don't get in a panic. They most likely filed an extension for you, which is very, very common, especially when you're living here in Israel, because it takes more time to get those Israeli tax documents. You will have until October 15th, but the original deadline for you automatically is June 15th. The FBAR form is automatically extended until October 15th. So you have until October 15th to file the FBAR form. Okay. And currently with the war, so all 2023 and 2024 tax returns are automatically pushed until September 30th, 2025. So you have plenty of time to get on top of any of these, to prepare them, to file them as much as you need. There's one other very important detail here, which is that you are always filing for the prior year, right? Meaning if you're reporting your income, you're reporting the highest balance that you have in the accounts. You can't do that until after the year is over. So for right now, while we're in 2025, everyone is filing their 2024 tax return and FBAR. You would not be filing your 2025 tax return or FBAR right now because you are hopefully still making money throughout 2025. But that is the due dates of when you have to file. And again, 2023 was automatically extended. 2024 was automatically extended for everyone in Israel. You guys are doing a phenomenal job in terms of keeping us all safe. You know, the IRS recognized that. They didn't recognize the Iranian 12-day war for some reason, but they did everything else before then. So everything from 2023 and 2024, September 30th, 2025, that's the due date right now. And again, 2024 can be automatically pushed off until October 15th for both of them. Okay, the filing thresholds for the FBAR form, which again, the form is if you have over $10,000 combined, or about 33,000 shekel combined at any point during the year for pensions and bank accounts altogether, then you need to file this FBAR form. Okay, so let's say as an example, I have 20,000 shekel in my bank account, and I have 20,000 shekel in my pension account. Those combined, I now have 40,000 in total, over 33,000. I have to file this FBAR filing. Okay. And I have to do that annually. So at any point in time, if it crosses over that 10,000 threshold, that means that for 2020, well, if it crosses today, let's say, that means that next year I will file an FBAR for 2025 because in 2025 my balances went over $10,000 or 33,000 shekel. Okay. What it includes is exactly those bank accounts, pension accounts, stock accounts. If you have, a portfolio or something here in Israel, that is what's included. It is specifically just foreign accounts though. So let's say you have a savings account in the US, you have a brokerage account from in Chase or JP Morgan, anywhere in the US, That is not included for this F bar. So you can have $1 million in your JP Morgan Chase account and $9,000 in your Bank of Poalim account. You would not have this F bar filing requirement because your foreign accounts don't exceed that $10,000. Okay, the second it does, though, you have this filing requirement. Okay. And what you would report is the highest balance of each of those accounts at any point in time, which can get a little bit funny. And so, as an example of why that would be a little bit funny, let's say I take $1 million in my Bank of Paulim account, I transfer it, I open a new account with Bank Leumi, I transfer that $1 million into Bank Leumi, and then decide, you know what, this account, I don't like the banker here, I'm going to open up a Bank Mizrahi account and move it there. I have to report three different accounts with the highest balance in each of them throughout the year. Each of them had the highest balance of $1 million. I clearly don't have $3 million, but I'm going to be reporting three different accounts, each with the highest balance of $1 million. Okay, the US government knows that this is an issue, knows that it's a problem. It doesn't have to make sense, but that's what the filing requirement technically is. Okay, so it would be the highest balance that you have in each of those accounts. Um, the penalty for not filing this form is very important, meaning while this form is entirely informational, there's no tax due. I don't owe anything because my bank account balance went over $10,000. I don't owe anything to the IRS because of this or to the US government because of this. But if I don't file it, that is where they can come back to me and say, if you didn't file this on purpose, the penalties can be very, very high. If I just didn't realize that I had to file it, I can still get a penalty of $10,000 per year that I didn't file this form for at least the past 6 years. So you're looking at least $10,000 for the past 6 years, could be $60,000 if I had 6 years of needing to file this and I didn't do that. Okay. Before you get all panicky about it, I will say it is very rare for that to happen. There's lots of ways to fix any kind of issues or situations, and we'll go through it all. And all I can focus on right now is that Danielle sent me an email prior to this being like, clean up all of the double languages here where it says like, however, this twice. And I did not know what she was talking about. And now I'm looking at this and I see it so clearly, and that's what's sticking out in my head. So I apologize for some of the double languages, like however this, however this. But but yeah, so it is a $10,000 penalty. Wow, that was cool. Um, but yeah, okay, so that is what we are looking at in terms of what has to happen with this FBAR. And again, we will go into how to fix things if you haven't filed it. I wouldn't panic too much, but just so you're aware.
Yaakov,
Okay.
I'm gonna pop in just for a quick second because I think
Yeah.
it's a really, really, really important question. All of them are important questions. This one I think will definitely help people hear clearer. When you say pension in Israel, do we call that in Hebrew a Keren Shlamut account?
It could, so it's a good question. Any of those accounts are included. So Karen Pensia, which everyone should have automatically from work, is generally a Karen Pensia. It can also be a Karen Ishtalmut would also be counted towards that. It can also be a Kupot Gemel Hashka'a or any kind of Kupot Gemel. Bituach Menalim, as some of you are advancing in your careers and getting additional funds. Any of those types of funds. So yeah, Karen Ishtalmut would count. Any of those types of funds would count towards be a pension account or one of those types of accounts that would be included in the FBAR. Okay. What is not included in these FBAR forms is any kind of asset outside of a bank account. So let's say, I know that some of you are holding, Bitcoin or something like that privately in a cold wallet on a USB drive. That is not reported here. If you are holding, let's say, real estate that you bought, that would not be reported here. Even if you're holding a car that's a French car in Israel, so it's foreign for sure for US purposes, it's not a bank account or a pension account or any kind of investment account. So those would not be reported on your FBAR. What is, again, is bank accounts, pensions, Keren Ishtamut, Kupot Gemel, anything you have through the bank, or basically any of those pension funds, Harel, Migdal, anything like that. That is what is being reported here. And there's I would say, an argument about what about Paybox or Bit. So if you have balances in those accounts, some will include them. The idea here is always better safe than sorry. So if you're not sure, I would probably say, with like a Paybox account, you can include it. It doesn't hurt at all. Again, because there is no tax on it, it's not going to come back to bite you at all. Okay. Um, Now this is jumping over to the first form, we're leaving the FBAR form for a minute and going over to the tax return, right? And the main idea with the tax return is that you will have to file a tax return. Again, if your total income for the year is over $15,000, or we said about 55,000 shekel, right? So if your income is over that amount, that means that you could have a filing requirement. Now, and that is if you're single. If you're married to another US person, it might be combined, double that amount. It's somewhere around there, about $28,000 in 2025. And each year it goes up and up and up for inflation. If you're married to a non-US person, it might actually be somewhat lower, but again, you can use that 15,000 as a good marker. Okay. Now, while you have to report your income, so let's say you get a salary from the army, right? You may owe tax to the US on that. You have to report it. You very, very likely will not owe anything. And the main reason why is because while you have to report your income to the US, there are two phenomenal ways to make sure that you do not owe taxes on your income when you're living abroad. Okay, the first easier way I will say is this foreign earned income exclusion. Okay, it is a special form that is included on your tax return. And what it basically says is up to approximately $130,000 of earned income is not subject to taxes because you live and work abroad. So let's say you have a high paying salary in the army and you're making $120,000. Your tax return would say, I live in Israel, I make $120,000 from the army or from my high tech firm, whatever it is. But because I live abroad, I'm not subject to tax on the first $130,000 of earned income, salary, those types of earned income, right? And therefore, I am not subject to tax on it, and I do not have to pay taxes. So you report it, but then you can back it back out again on your tax return, and you end up not paying anything. Okay, so it basically says $130,000 of income minus $130,000 that I can make without paying taxes in the US. I end up with zero. I don't know anything in the US. Okay. It works on any kind of, you guys, miluim, I would say, is very much earned income, right? It's anything that is considered earned income. So it doesn't apply to, let's say, you have interest income, dividends, capital gains through the bank account. You make an investment in the stock market, you get money back. You didn't really earn that in the same way. You didn't put in your effort. Sure, you might have put your every shekel to work for you, but the shekel is doing the work. You're not doing the same amount of work. So you wouldn't be able to exclude that. But, salary, miluim, those types of things, pension income as well. If for some reason you're getting pension income, which would be kind of weird in this case, it would also be excludable. Okay. Now, sorry, let me go back. The second way to do it, though, is let's say you are making big bucks, right? You're making $200, $300, $400,000, which is way more than 130. So even then, the second way that you can file your tax return and not pay any US taxes on it is you say, I make any amount of money, right, on my US tax return. Here, I make this amount of money, but because I'm living in Israel and doing this work in Israel, even if it's for a US client, let's say, a US company, but I'm working remotely from here in Israel, I earn this money and I pay taxes in Israel. And Israeli taxes are pretty high. So I'm basically going to say, I make this money. I'm already paying Israel more than would owe in the US on that. Let's say I make $200,000. I would owe, as an example, just throwing it out there, I would owe the US $30,000, but I'm paying Israel $40,000 already. Then I get a dollar for dollar credit, tax credit, meaning an offset, and I don't owe anything further to the US. Okay, so that is the second way to file it. It is a little bit harder if you are self-preparing your tax return or something else, and we'll go into how to, prepare your tax return, how to do it, what platforms to use, and the like. But I would say while the foreign tax credit is slightly harder, if you have an option between these two, which usually is the case, the foreign tax credit will be more beneficial for you. The main reason why is that it has these benefits that carry over to future years. So let's say, again, you make 130,000, right? You can exclude that whole thing. But instead of saying I want to exclude it and use that first method, I'm going to say I want to use the foreign tax credit method. I would owe the US on 130,000. I might owe them $15,000 of tax. I'm already paying Israel $17,000 of tax. So I don't owe anything more to the US because 17 is more than 15. But the benefit here is that $2,000 difference I'm now going to take, put on my tax return, and it's going to carry over to next year. And if for some reason next year I have income like RSU income from high tech firms or stock options or some other kind of nice income that I get from working, Karen Ishtamut that I take out, I might owe US tax on that. I don't owe Israeli tax on it necessarily. And now that $2,000 that I have from last year that I carried forward, that's going to come in and be my savior to offset that US tax. Okay. And that gets a little bit more complicated, but bottom line, what I mean is you can choose between these two each and every year with some caveats, but I would choose the foreign tax credit over the foreign earned income if both of them apply to you. Okay. That one caveat is you can always switch from the foreign tax credit, that second way, to the first way. You can also switch from the first way, the foreign earned income exclusion, to foreign tax credits. But if you change from foreign earned income to foreign tax credits from way one to way two, you can't go back to the foreign earned income exclusion for 5 years. So you just have to be somewhat careful about switching back and forth constantly. But that's why another reason why it makes sense to use the foreign tax credit, stay with that the second way, saying whatever I owe in the US, I'm paying more in taxes in Israel, because then you can always switch back and forth more easily. Okay. Um, Income sources that you might have and you might want to be aware of is miluim and grants that you have. So standard miluim pay is usually, if that's what you're earning, it's below that $15,000 filing requirement, but it is considered income to you guys. You do have to report it on your tax return. If you have total of more than that 55,000 shekel of income, then you do have to report that miluim income as well. Uh, and usually travel reimbursements and the like are non-taxable. Okay. The second type of income that you might have, and this is something to be much more careful, is let's say you are doing side gigs or you have self-employment income. Okay. And this is where the US and Israeli tax treaty kind of falls through for you, right? When you are working as an atzma'i, you have an ESEC that you opened up or something else, you're doing some kind of side business where you are working and getting paid a small amount of money or even a large amount of money from all of these different clients that you have, or for specific, let's say you work as a nurse on the side as well as, you got out of the army, you're starting working and you're doing it as an entrepreneur where you have your own business or your own venture that you're doing there as an osek moshe, as a self-employed person not getting a salary. So that is where there's a problem with the U.S. Israeli tax treaty. The U.S. Israeli tax treaty is specifically geared towards income taxes. It does not have something called a totalization agreement. And that totalization agreement, which almost every other country with a treaty with the U.S. does have, so like England in the U.S., France in the U.S., Germany, everywhere else has what's called a totalization agreement, which means that if you are paying the equivalent of bituach leumi in that country, you are not subject to U.S. Social Security tax. Okay. But Israel and the US do not have that in their treaty. So if you are working as a self employed individual, you will owe Israeli income tax. You'll also owe Israeli bituach leumi, which can be about 15% up to certain thresholds. And you will also owe US self employment or Social Security tax of about 15%. So if you are working as a self employed individual, just know that you could potentially have double tax on that from a bituach leumi and social security standpoint. It isn't entirely bad. There is some silver linings. So if you pay in enough to social security over the years, then when you retire, you're able to claim it back and get some nice money from it. But I would say there's other investments you can do that might be smarter. Just be aware that if you are doing something as a self-employed individual, it could have some additional tax requirements and actual tax due to pay to the US. Okay. If you have not filed for a number of years, let's say you've never filed, and now all of a sudden you're hearing this and you are like, oh my gosh, I should be on top of this. I have to be filing these tax returns. What do I do? There's a number of different ways. And again, I would not worry about the late F bars. Don't start panicking like, oh my gosh, I could be subject to a ton of penalties and the like. The different issues that you have, the tax return, if you haven't filed that tax return until now, that 1040 tax return, that first form, if you have a requirement, but you would not owe any tax. So let's say either of the two ways that we mentioned before, right? I make $120,000 of income, but I'm able to exclude that, so I wouldn't owe any tax on it anyway. If I didn't file that tax return and the IRS comes to me and is like, hey, how come you haven't filed your tax return yet? The penalty is a percentage. It could even be 8% of the tax I owe. The tax I owe would be zero. So it could be 8%, it could be 20%, doesn't make a difference. It's 8 or 20% of zero is still going to be zero. So I wouldn't worry too much. The bigger issue is those F bars, which again, if you haven't filed that F bar and they come and knock on your door, you're looking at about a $10,000 penalty. They have not done that to date with anyone in normal standards. Okay. There have been some cases, but usually what they're looking for is people with millions of dollars that live in the US and hide their money overseas. The second type of person that they're looking for are people living overseas with, again, millions of dollars that they're hiding in like Swiss bank accounts and the like. They're not looking for people who are living and working in Israel who do miluim and get out of the army and might have a bank account or two here in Israel because you live here. That's not the type of person that they're looking for. But if you want to be careful, what you can do is you can file under the streamlined procedure. The streamlined procedure has some caveats to it, but the basic idea is you file 3 years back of tax returns, 6 years back of FBARs. So right now, and it's a little bit tricky right now because of that war extension. But let's just say the war extension didn't exist. You could file 2022, 2023, and 2024 tax returns, and then 6 years back, so 24, 23, 22, 21, 2019, 2019 to 2024 of FBARs, and file that through the streamlined procedure, and there would be zero penalties for you whatsoever. Okay. There are some caveats with the streamlined procedures, specifically with you guys, which might be more problematic. So at least one out of those 3 years, you have to have spent more than 330 days or 335 days out of the US, meaning that for each of those three, for any of those 3 years, rather, 2024, 2023, or 2022, it must have been at least one of those you weren't in the US for more than 30 days, which is about a month. Again, as lone soldiers, that might be kind of tricky, but just be aware of that, okay? Um, if you filed tax returns, very, very often people in your situation, you'll say, well, my father files my tax return with my accountant, with his accountant in the US, but they never reported any of my Israeli income because they never knew about it. So that's not a problem. Again, you probably wouldn't owe anything additional because of it, but you can look into what's called amending your tax return, which is basically fixing your tax return, and you will file a Form 1040X and include that Israeli income. So let's say you have a bank account with some investments that your father set aside for you or your parents, grandparents, whoever set aside for you in the US, you can file that tax return. And they might have filed that tax return for you with their US accountant. So you can fix your tax return. You can go back to that accountant and say, hey, I have some Israeli income from the army you might not have included. Can you fix my tax return and just include it in there? Again, the chances is that your tax won't increase at all, but it might have some small changes for it, nothing too big. And then lastly, if let's say you don't have a tax return filing requirement, you might have these bank accounts and pensions that are over $10,000, but you haven't been making a large amount of income, or you've been filing your tax returns. Again, let's say your father's accountant in the US is filing tax returns for you, and they're even including your Israeli income, but the guy never knew what an F-bar form was. So that's not a problem. If your tax returns have been filed and your bank accounts and pensions here in Israel you haven't been evading taxes in any way. You just didn't include those accounts on an F-bar form, but they don't really generate income. It's an over v'shav. It's a checking account that you have here in Israel. It's a pension account. You're not, pulling money out of that pension account. So that's not a problem. So you can file those F-bars late and with what's written here is a reasonable cause, but you don't even that is actually an extreme level, a reasonable cause. You can actually just include any kind of late explanation on that F-bar, which basically says, I didn't know I had a filing requirement, but all of my income has been reported properly on my tax returns. And if you do that, again, the IRS is not going to give you any kind of penalty or anything else. They just want to know that you are up to date in filing. Okay, so if you do that before they come knocking on your door, you will be fine. No penalties, no issues whatsoever. Okay, so again, if you haven't done anything for the past, now you can fix tax returns if they were done improperly, you can file tax returns through the streamlined procedure potentially if they haven't been filed yet. And if you've been filing tax returns, so you don't have to file tax returns, but you're missing those FBARs, easy to do. You can file those FBARs now and include some kind of explanation as to why it's late, and there won't be any kind of penalties. Okay. Um, Options. These are options for you in terms of, let's say you just learned that you have a filing tax return. You have a filing requirement and you're like, hold on a second. I never did this. Like, what do I have to do? So there's a few different options for you available. Our firm is on the higher end, I would say, but we're happy to help you if you really want, or if your case is more complex. What I would suggest doing is for FBAR forms, we have two different YouTube videos that I think Danielle and Samantha will share with you about how you can download, prepare, and electronically file the FBARs for yourself. Okay. While it might sound complex, it is not the most complex of forms, the FBAR forms. It's important to get right. But again, it is not that complex to file the FBARs. And if you want to save anywhere in your tax situation, FBARs are the way to do it. You guys have been dealing with Army services and, going through crazy, commands and everything that you're getting from everyone else. This will be a walk in the park. It shows you again how to download it. You say, this is the accounts. These are the account numbers. These are the balances, vizehu, and that's it. Okay. So it's not too bad or too complex. For the tax returns themselves, I will say the second you get into international income, TurboTax, if you've heard of it, is out the window. Okay. There is a good alternative. If all you have is salary income and that's it, or you have a very basic tax return, I will say there is a company, simpletax.co.il. Highly recommended. I know the owner. He's a great guy, and it's not expensive for filing a simple tax return for you. Okay. Once you get more complex situations, let's say you are coming from the U.S. and you still have residency in the U.S. So you start to have rental income here in Israel, or you work for a high-tech firm and you are getting equity, RSUs or stock options or something in that high-tech firm, then I would say you want a professional to kind of take a look at your tax return, make sure that you are doing it correctly. They can help you walk through the whole process and prepare it for you. And at that point in time, that is when I would turn to such a professional and say, hey, I would like you to prepare my tax return. Is that doable? The cost for the tax return can usually go from about 1,500 shekel to 2,500 shekel for U.S. tax returns, depending on who you are using. There is, I will say, out of every country in the world, the second largest of U.S. tax preparers is probably Israel, the first being the U.S. I can't imagine that any other country in the world for some reason has as many U.S. tax preparers. It's kind of crazy, but I guess it's Jews and accountants. They go together. So Israel has a lot of U.S. tax accountants. You can find a person to help you with your taxes. And then you might hear like lots of different things, like the child tax credit. What people will often refer to as the Kitzbat Yiladim in the U.S., if you're familiar with the thing here in Israel. And there are a lot of credits that you guys should be aware of, and one pitfall over here. But these are the two most popular ones. You will see advertisements for this. If you pick up anything like Torah Tidbits or anything else, you will see people advertising these tax credit refunds that you can get. This was right after, I would say, the most popular one a couple years ago was probably the COVID stimulus checks, and lots of people filed tax returns without realizing that that's what they were doing when they were getting those. But these are the two other ones. If you have U.S. children, right? If you guys have children that are U.S. citizens, you get them social security numbers as quickly as you possibly can. You can file your tax return and say, hey, I made this much money. I would pay the U.S. X, but I'm already paying Israel more than that. Therefore, I don't owe the U.S. anything more. And by the way, I have a child who's a U.S. citizen. For that child, you get $1,700 back as a refund, or about 6,000 shekel. That means that is money in your pocket. They will send you a check or deposit it into a U.S. bank account for you, and you can keep that money. So, and you don't have to pay anything, meaning it is specifically per child you can get that. And so there's certain limitations and caveats there, but for the most part, it is you file a tax return and say, hey, I would owe the US X amount. I pay more than that in Israel. And by the way, I have 4 children. So give me back $1,700 for each of those children who are below the age of 17. When it was put into place, it was put into place as it was put into place because they were thinking, hey, there is no country in the world where people have more children than they do in the US, make less money, and pay more in taxes. And sure enough, Israel hit that right on the nail. We make less money than in the US, we pay more taxes than when we were in the US, and we tend to have a lot more kids than people in the US. So it ends up being a phenomenal benefit. The second one to be aware of is the education credit. The education credit is basically if you are going to an accredited Israeli university. I don't remember what IDC is called now. They changed it right to Rikanati or something like that. But
Reichman University.
Reichman University, thank you. So Reichman University, Hebrew University, Tel Aviv University, all of these tend to be accredited. I think Ariel was the one thing that was on the border, and so it was kind of a little bit more problematic. I don't know if they've gotten past that now, but basically, if you are paying for tuition here in Israel for the first 4 years post a high school degree, meaning any kind of bachelor's degree, even if you've had 2 years or 3 years for a bachelor's degree and then you go for a master's degree, if it's the first 4 years outside of a high school degree, you could potentially get back a refundable portion of about $1,000 per year. So you will see that as well. That, hey, file a tax return. You can say, this is the amount of money that I make. This is what I already pay in taxes, more than I would owe to the US. By the way, I also pay for tuition here. Give me $1,000 back. Okay, now there are two caveats with that. One is that it's the calendar year in which you pay it. Two is that it's not an absolute necessity, but it makes your life so much easier if you get what's called a Form 1098T from your school. So I would speak to the bursar's office in the university that you go to and make sure that they are aware that you are a U.S. person and you want that Form 1098T. And the third caveat is that if you are getting some kind of stipend, because you were in the army, a lone soldier, you made aliyah, anything like that, and so your tuition is much lower, or you don't have to pay any tuition. So then it doesn't mean that you can get this refundable credit. It is something that, if you pay, you get it. If you're not paying it because you get this great benefit, that's awesome. That's amazing, but you can't kind of double dip on that. Okay. And the last thing I would say, which is this, it's not a benefit, it's not a credit, but it is kind of just something to be aware of, is if you left a state, let's say New York, California are the biggest ones because they give the hardest time for people breaking residency, just be aware that you might have to file a state return as well. Okay, so let's say you made Aliyah from California, and again, your father's accountant continues to file for you. There is a good chance he is filing you as a California resident. You would have to show them, hey, I broke residency from California. I went to the Israeli army. I became, an Oleh Hadasha or an Oleh Hadash. I am living in Israel. I'm an Israeli resident. This is where I want to make my home and stay. And therefore, please, stop filing California returns. There's a certain form you can do to file and break residency on your tax return with that state, but it is something important to be aware of. Otherwise, you might still have to continue to file state returns, and you could end up paying money to the states, even if you're not paying money on your federal U.S. tax return. Okay? Just because you're able to vote there does not mean that you have tax residency in that state, but you do want to double check it and make sure that you are breaking residency. Okay. Um, we're almost done here, guys. So sorry. Here's the full slide on state residency. It's crucial again to just formally break your residency there and file something. And it's not based off of voting. So here is your action checklist of what you want to do. You want to be at the end of the year, I will say, check your balances, note the highest shekel balance in every account, including those Keren Ishtamuts and pensions that you had. Okay, what was the highest balance? I will say if you look periodically, you don't have to be keeping an eye on it and running through the daily account. You basically know for the most part if there was a big spike throughout the year. Let's say an aunt gifted you, $40,000 so you could buy a car. You will know that that's the highest balance offhand, right? But otherwise, if you're looking at a quarterly basis or a monthly basis of what is the amount in your Over V'Shav, you can go with that. The IRS is willing to take periodic statements and estimates for the highest balance. For pensions, I would usually say look at the beginning balance for the year, look at the ending balance of the year, and pick which one is higher. So if you look at your Keren Ishtamut, there's a good chance the ending balance for the year will be higher, and you should use that. But some years where the stock market does terribly poorly, so then the beginning balance might be higher. So just look at those two balances and take that. Take your total income. Income is something that you've earned for that year. Two important things about that, meaning it's not money that you have in the bank, it's money that you earned, money that went into your bank account. Okay, so that is from, again, it could be from self-employed work, it could be from a salary that you earn money from, it could be that you have a stock portfolio in the US and you didn't take money out or you didn't sell any of those stocks, but they might have distributed dividends to you, meaning companies can sometimes distribute dividends to their shareholders, and then that might even be reinvested by your bank. So you should ask your US banks that you have stock investments in, right? So if it's just a checking account that you have in the US, a savings account that you have in the US, you don't really have to worry too much. But if you have a brokerage account in the US, then I would ask them for a Form 1099. It's usually available in February, okay? If you have an investment account here in Israel, the form would be a Tofes 867 or a Tofes 867. That would be the form that you would get from your Israeli bank account. So again, just ask them for that. That usually comes out closer to March, April, May time. And then check thresholds. You know, did you have income over $15,000? And again, self-employment income, even if you had over $400, so that atzmai self-employment income is its own threshold. You might owe tax, and therefore, even if all you had was $500 of self-employment income, you would still have a tax filing requirement, even if you don't have 15,000 for the year that you made. Okay, so self-employment income in itself is something to just be aware of. And then make sure to file tax returns and FBARs, you know, I would say again by the extended due date that we mentioned, and just make sure that you are keeping copies of everything you file. That timeline of how long should you keep records for? People always ask this. I will say it is a minimum of 3 years from the due date. So let's say right now we still have time before you have to file your 2024 tax return. That means that from October 15th, 2025, you want to keep your 2024 information for at least 3 years. At this point in time, we live in a world you could take pictures of everything. You have PDF documents, save it to a cloud folder somewhere, you know, Google Drive, Dropbox, wherever, save it somewhere and keep it for as long as you can, at least 6 to 7 years, just to be on the safe side. But at a minimum, you want to make sure you are holding on to everything for at least 3 years. Okay, and that should be it. That should cover you from your filing requirements. Okay, I'm gonna stop share here.
Amazing. And we have a ton of really good questions, very insightful. There's a couple repeats, so I'm going to try and combine them. I'm going to start with the most general so that the most people can have something to gain from them, and I'll go into the more specific ones. A couple of people asked about, we obviously have some students who are studying in Israel, scholarship money that they get from either the school or scholarships that they earn from the army, all that kind of stuff. Is that taxable?
So scholarship money is taxable. Okay, I would say there's a secondary question of is it earned income or not? And very often for scholarship money, you have to do something in order to receive that scholarship. So let's say it is a research grant or something like that, that you have to do research or you have to help with a class or a lecture. So then there is a position to say that it is earned income. And so while it does count as taxable income to you, you can exclude it, meaning you can use that form 2555 to, or that foreign income exclusion to say, because I earn less than $130,000, I can get rid of it and not pay tax on it. But it is a taxable income source.
Is that also true for government benefits? So people who have made Aliyah, right? They have Sal Klita from Misrad Klita, and then also because I'm assuming everybody on here was a soldier, a lone soldier. After the army, they're getting their Manach Shichog, they're getting their Pikadon after 5 years. Whenever they get those amounts, are those also things that they have to include in any of their paperwork?
Yeah, most governmental payments that just come from making Aliyah or doing something like that, so like the Sal Klita is not considered taxable income to you. All of these, I will say the following. All of them are kind of in this. It's not just you guys wondering this, it's the entire world. It is very unclear because, again, Israel and the US has this weird relationship. I don't think other armies around the world give these types of benefits the same way that Israel does, but there is a certain amount of money that comes from the government, like Sal Klita, or if you get Kitzbat Yiladim from the government as well, if you have kids, that is not considered income. And therefore, it is not something you have to report or pay tax on in the US. With Army income, it is a little bit more nuanced in terms of what kind of money it is. If it's coming from, let's say it's because you guys are doing miluim or you're getting some kind of ma'anak for being in the Army, that might be considered taxable income to you. But you have to look at each individual type of grant that you're getting and the like. Some of it will not be taxable, some of it will be. And it is a confusing situation.
We have another couple of questions that talk about what we're talking about. Can you clarify if people are making money both in the US and in Israel at the same time, do they have to, where do they not log, but where do they write down each of those? Are they
Yeah.
combined? Are they separate?
Perfect. So I will say it is very, and that answer can be very nuanced, meaning if you are sitting in Israel doing work remotely for a US company, okay, it is still considered Israeli source income. For active income like salary, consultation income, anything like that, it is dependent on where you are physically sitting doing the work, not where are the clients sitting, okay? In any case, on your US tax return, you will file 100% of your income, worldwide income, Israeli income, and US income on your US tax return. Okay. At the same time, because you are Israeli residents, it depends on is it fully reportable in Israel or is it not? And that caveat comes down to are you within the first 10 years of Aliyah or are you post 10 years of Aliyah? If you're post 10 years of Aliyah, the answer is very simple. You have to report 100% of your income to Israel as well. So let's say you're post 10 years, you are reporting 100% of your income to the US and 100% of your income to Israel. Now, who gets the first bite of taxation? That comes into play with the U.S. Israeli tax treaty. And each different type of income that you have is sourced to the countries depending on that treaty. As an example, again, you're sitting in Israel doing work in Israel, employment work, like you're getting a salary or you're getting consultation income. You have a sole proprietary that you opened up. You started selling AI services online. Uh, you opened up a YouTube account and you're, making videos and generating income from YouTube, that will still be taxable because you are physically sitting in Israel. That will be Israeli income first. So you would theoretically pay Israel first and then the US. With a brokerage account where you might be investing stocks and bonds and the like. So that will be dependent on the type of income, generally capital gains and interest. Israel gets the first bite of taxation. And then again, you get a credit on your US return. You say, I would owe tax in the US, but I'm already paying Israel. On dividend income, you pay the US first. And then if it's US dividends, let's say I have a JP Morgan account in the US with dividend income that I'm earning. So you will pay the US tax first, and then Israel will give you a credit for US taxes. So each type of income will depend on what it is, uh, depending on who gets the first right of taxation, but you report it in both locations. If you're within hold on, if you're within the first 10 years of Aliyah, then I will say it gets a little bit more, confusing. But basically, again, earned income that you're earning, your working salary, any kind of income like that, again, you're doing the work in Israel, it's Israeli source income. But that passive income, that bank account income, that, you have an investment account in the US, if you're within the first 10 years of Aliyah, that does not get reported to Israel. Okay, so then it's just reported in the US, those capital gains, interest, dividends, that type of thing. And Israel, you don't have to report it if you're within the first 10 years.
In that vein, kind of like going off of, oh no,
Yeah.
you guys are asking so many questions. In general, if this is the first time somebody's kind of navigating the tax world for US Israeli stuff, if they're one of those people who has income coming from both the US and Israel and have accounts in both countries, would you recommend for the first time maybe using a firm and then once they feel more confident with the process, then doing it independently, or do you think it's dependent on the person?
I would say it probably makes sense to use a firm repeatedly. In fact, it depends. You might, on the situation, I would say you either want to use one firm, or you might want to use two different firms. You might want to use a U.S. tax firm to prepare the U.S. return and an Israeli tax firm to prepare the Israeli tax return, but make sure that they are speaking one to the other. Okay, you don't want to be preparing it with two different companies that are totally not talking to each other, because that will be the worst of the situation. But yeah.
Also, I'm seeing some questions that are about the other way, about Israeli taxes. For time, and because this webinar is themed specifically for US taxes, I'm going to put those to the side. People are more than welcome to send emails to us afterwards. And if we see that there's enough interest, maybe it's something that we will consider, but I'm going to stick to the one specifically for US taxes. This one seems like a quick one. Can you say again why TurboTax cannot be used?
TurboTax can be used, but when you get into the field of international income and the like, it isn't built as well for that type of income. And so it is much easier to make a mistake on TurboTax when you have that international income. I will say if all you have is, let's say, maybe a small bank account and that Israeli salary, I will say simple tax will end up being a better version. It's similar to TurboTax in that you can do almost the whole thing online yourself, but it is just built for people in Israel. And so it makes it a much simpler process than using TurboTax.
Got it. For these forms, writing occupation, obviously with the state the world is in, publicly writing and having access to records, writing that we're part of a foreign military can get people a little on edge. So on these forms, if people are in Keva or if they're currently like their only source of income is Miluim, are they supposed to write down foreign military in that field on the form? And if they do, will it cause any issue with citizenship?
It shouldn't cause any issue with anything. And it's actually an interesting question, but you could write Miluim if you want, if that makes it easier. I don't think people are going to decipher the word Miluim as much. You could put down IDF, in terms of employer. I don't think that either of those would kind of come back to bite you in the end. If you do want to put on Israeli Defense Force or anything else like that, you absolutely can. In terms of citizenship, it will not harm your citizenship at the moment. There is something, and I think the reason why the question is coming up is that if you join a foreign military, it is actually an act of expatriation. Okay, meaning that it is an act of giving up your U.S. citizenship. However, that is not meant for allied forces like the Israeli armed forces. That's meant like, let's say you go join ISIS. Okay, if you go join ISIS, you are not planning on staying a U.S. citizen, and they will see that and be like, "Yeah, you don't like our country very much." If you are joining the Israeli Defense Force, you are, you're joining an allied Israeli army. They won't look at that and say, "Okay, you've given up your U.S. citizenship."
Got it. Now going back, there was one screen where we talked about foreign tax credit and the FEIE. So two-part. The first one is if you're having income of more than $130,000, is it possible to file both?
Yes, you can
Okay.
do both. Again, I would ask why you're using both as opposed to just the foreign tax credit, but you can do both of them.
Okay. And then speaking of foreign tax credits, how is that something that you have to file every year? And how many years do those foreign tax credits carry over?
Perfect. So it is something that you have to file every year, meaning that if you have foreign income one year and you're taking a tax credit, you'll probably likely have income the next year and want to take a tax credit again. So you would be reporting it. There's a special form called a Form 1116. It does make the tax return more complex, which is why people kind of default to the foreign earned income exclusion. Those foreign tax credits carry forward for 10 years. So let's say I'm filing my 2024 tax return right now. Again, I owe more tax in Israel than I would owe to the US. That will carry forward for 10 years from 2024 onwards.
Okay, and this one we kind of talked about, but it's a little bit nuanced. We said that the Muskolet from Miluim, you do put on these forms. Can you say the Manak though? Is that one of the things that you can get money back for? Like specifically Manakim from Miluim? which are
Manakim
different,
for, yeah.
which is different than the monthly than the maskolet that they're getting for doing their service.
Well, what's the reason for receiving the ma'anak? Is it for miluim because you're outside of work? So then if it's something that's kind of like unemployment or it's in place of work, it would be a taxable ma'anak.
Okay. And we have a couple people who are asking, how does it work, especially when you're talking about it has to file taxes, it has to go over a certain threshold, if they have a joint account with a non-US citizen.
Great. So yeah, so let's say you have, and there's a couple of nuances with the FBAR that we didn't get into, but there are different requirements. FBAR forms, there's a third form potentially as well if your accounts go over $200,000 altogether, but it's part of your tax return. Joint accounts count if they are in your name, you and someone else, they will still count as 100% of the balance is reportable on that FBAR form. Okay. So let's say you have a joint account with your spouse. It is $300,000. They put all the money into that account. You didn't put any money into it, but you are joint on that account. You still have to file that FBAR form and report $300,000 as the maximum balance because you are on that account. Okay. Let's say you are married to a US person. So you're both US people, and all of the accounts that you have are just joint bank accounts. You only have to file one FBAR. But and maybe you have a pension account and that joint account, you have to file an FBAR because they don't have a separate pension account. They don't have to file a separate FBAR. But let's say both of you are working, you both have pension accounts that are separate, and you have a joint bank account. Now, both of you, because you both have separate accounts as well, you both have to file FBAR forms. You will both report your pension account and that joint bank account for the full balance. So there'll be a double reporting of that bank account, and both of you will have to file FBAR forms.
Okay. I'm noticing the time, so I'm trying to go through a couple of them. I don't know who sent this, but it made me smile. If it's not taxable, why do we need to file it?
Meaning if you will not end up paying tax on it, why do you need to report it? So I will say the following two things that I live by. Okay. Number one, each president that comes into power makes it a little bit harder to be a US citizen living abroad. Okay. Each one kind of sticks in their own law, which makes it terrible to be a US person living abroad. The second thing is that most things that are set up that are problematic for US citizens living abroad were set up having in mind US citizens living in the US trying to hide money overseas. Okay. So the FBAR form, for example, is a reportable item because they basically didn't want US people hiding money overseas. They never thought, hey, there might be US citizens that have to file based off of citizenship living overseas. And of course, they're going to have bank accounts and pension funds. Like that's just an obvious thing that's going to happen. So they didn't take that into account. They did it for like the most conservative or machmir approach, and then it just affects everyone living overseas. Why do you have to file and report it even if you won't pay taxes? That's the law. The next question that usually comes up is well, how will they know if I don't? And I will tell you that number one, sometimes they won't know about it. But the second that you try to move money from one fund to another, or you try to open up a new bank account here in Israel or the like, they will start asking you for tax documents. They will ask you to sign off that you have been tax compliant. And so it is just easier to file it. And then you'll be able to do everything that you want to do. The banks won't give you as much problems or trouble, and you're able to deal with everything. Additionally, your banks might send information over to the US government and the like. So it is better to kind of get everything in order and cleaned up now.
We got a couple questions about, and I think we mentioned it, but let's put another dagesh on it. Specifically, the amounts of money that mishucharim get after getting released from the army. So we talked about the manach shichur, and then also they get rent money for a year period after. Is that money something that also would need to go on any tax form?
Technically, you could look at it. I would say if it's going to be the difference between, let's say the rent money and the income that you're getting is going to put you at $15,000-$16,000 for the year and create the filing requirement, I would say you can be lenient and not report it. Okay. If you are If you are well above that amount, though, then yes, it is a benefit. Technically, any kind of benefit that you are receiving in place of money is considered like money. So let's say that's why the scholarships are somewhat similar as well, is technically it would be reportable income. So I would say if it's gvuli, you can err on the side, like you could be more lenient, but if you're already over, I would include it. Again, you shouldn't be paying taxes because of it. But yeah.
We have a few people who are just about to finish their like Sadil active service and are moving on to Keva as professionals in the army. They wanted to know, is the money that they receive taxable because their salary would put them over the threshold that we talked about?
Yeah, absolutely. So then, yeah, people in Keva is usually definitely an area where you do have to file tax returns. You are going to be making more money, and therefore you do have to file a tax return. Again, though, you will be paying taxes on that income as well. It's not like because you're in Keva working in the army, it's exempt from Israeli taxes. So you should still be able to file a return if that is the only income you have. It is likely that you might not owe tax in the U.S., but it is definitely reportable.
We have a couple people who are clearly from California and New York, the states mentioned about the tax credit. If they lived in those states, are they automatically considered still a resident?
No. Meaning again, if you have really settled down in Israel, let's say you've never filed a tax return in that state, I wouldn't worry about it. If you have really settled down in Israel and you are in Israel to stay and that's what you're thinking about and that's where you're making your life now, then I would say I wouldn't go back now and start filing in one of those states. I would just start filing a federal tax return as if you're not a resident of that state. Okay. But if you came on Aliyah and did the Lone Soldier program and you are planning on being here for 2, 3, 4 years, but going back to the US for college or going back to live at home again afterwards, then those states might be able to claim that you've never really broke residency, that was always what's called your domicile, your place of living, and that's where you plan on going back to after the army service. So in such a case, I would say then you might want to file. The other thing I would note is California specifically does this, where if you have a bank account in California with an investment portfolio there, for some reason, they just automatically think that you're a resident there. So I wouldn't be surprised if you are filing, not filing anything for California in specific, and then a few years down the line, you get a letter in the mail that says like, "Hey, you never filed a California return, and we naturally think that you're a resident here because you have a bank account on, Pico Robertson or something like that." So just be aware that that can happen. It's not a big deal. You then send them a letter that says, it's just a mailing address because my parents live there and that's where the bank is, but I've been living in Israel for years and I'm not a resident of California.
The figures when you've talked about thresholds and meeting it or exceeding it, those are numbers that you're talking about specifically for work done in Israel.
That is for which thresholds? Meaning like $15,000 of income? That is
Yes.
worldwide income for worldwide, meaning that is any income that you make in total for the whole year.
Okay. And then we have a couple people saying, what if they don't know if they reach the threshold and thus don't know if they need to file this paperwork?
Right,
How do
which,
they figure out if they
yeah,
specifically one of the questions said that I'm not sure in the past if I've reached the 10,000 threshold to file the F bar.
right. So again, there, I will say who they are looking for is people who are that the main source of people they're looking for are people living in the US with millions of dollars. It's a good idea to be cautious and file. If you might have just crossed that $10,000 limit though, and you're not sure, maybe it went 10,000, maybe it went 11,000, I wouldn't lose sleep at night if you don't file it. If you clearly know though, that let's say you had parents send you money that was, $20,000 to buy a car, or you have a pension account with clearly over 33,000 shekel in it because you've been working for a couple of years already, then I would say that's when you would go back and file and I would be more careful. But if you are unsure, if you don't know if your bank account balance and pensions went over $10,000 because it might have just peaked over it and been like 10,100, I wouldn't worry too much about it. The IRS is not going to look at that and be like, hey, you didn't file an FBAR. Why not? They're not going to know how to do that math if you can't. So I wouldn't go too nuts.
What about, and we are over the hour, so if people do have to go again, we're going to be sending a follow-up email with a recording, and it's still recording, so you won't miss anything. And we are getting additional questions again about Israel tax, which again, we're going to stick to just the American tax questions. I'm going to take another 5 minutes questions, and then we will wrap up. So apologies in advance for those of you who I do not answer the question. I will try and go as fast as possible. If money is gifted, you touched on BIT. I'm going to circle back to BIT. If money is gifted to somebody by relatives and it's on BIT, does that need to be put on the form, and is it calculated in the number?
So yeah, so gifts are not considered income. Okay, so it would not be part of that tax return income. It would be part of that FBAR form because again, the FBAR form is not about income, it's about balances and accounts. Gifts get a little bit more complicated. What I would say specifically, if you guys are receiving gifts from non-US people, okay, then you don't have to worry about it from a tax perspective. There's a secondary form that you might have to file if those are substantial gifts. And by substantial gifts, I mean, let's say your non-American grandmother gifts you more than $100,000. Then you have to file a special form for it. But if you are getting gifts of less than $100,000 per year from non-US people, again, it's part of your FBAR because it's part of the balance. So it might be the highest balance you have for the year, but it isn't going to be a taxable event. You don't have to report it on your income tax return or anything else like that.
Somebody received their U.S. citizenship only in 2024. So do they need to file for this year?
2024. Yeah, 2024 only. From when they got there. If you have citizenship at the end of the year, you're considered a U.S. citizen. For that year, you have to file. It's an interesting year of filing, meaning you might not have to report all of your income for the year just after you received it, but I'd say it's a little bit more of a nuanced, unique type of question.
And then we have one or two people who specifically got a pension in fields like police officer and firefighter and stuff like that. Correct me if I'm wrong, because it's a pension, I'm assuming that would be taxable, or because of their field, is it different?
One more time. What's the question? Meaning,
It's a couple people. There's a police officer and a firefighter, and they said that because of their field, they got a specific type of pension, and so they want to know if it because of their fields, is it a special case and those pensions don't count, or do they count because point blank it's a pension?
No, pensions count across the board. So regardless of profession.
Okay. Does the FBAR threshold also rise for married people?
So no, so it's very interesting. It's very funny. Tax return thresholds go up every single year. They rise for inflation. FBAR threshold is like standard $10,000. It doesn't change if you're married, filing jointly, or anything else. You have that $10,000 limit. We could be talking in 10 years from now, it'll be $10,000. 6 years ago, it was $10,000. That doesn't change. It's a clear border.
This is actually, I'm also curious about this. Is there like an ideal way, specifically with the tax perspective in mind, from moving money from like an American account to an Israeli or vice versa?
Yeah, good. So transferring money, this comes up all the time, is what happens if I transfer money? How is it taxed? So once the money is yours and you've paid tax on it, there isn't a secondary tax on transferring those funds. So let's say I move money from my Israeli bank account to my US bank account or vice versa. There is no tax related issue with doing that, not for US purposes, not for Israeli tax purposes. What does come up is okay, now your bank needs you to sign off on lots of different forms saying that it is tax compliant and the like, which again is one of the reasons why it might make sense to file tax returns, even if the US government won't know about it if you don't. But there isn't any tax on that transfer. There's a whole separate question of how is the best way to do it to have the least amount of bank fees and transfer, shekels to US dollars. And there's certain companies that are built around that question, but it isn't taxable in any way.
And for the last question that we're going to take due to time, which I think is a classic and really just sums it all up. If the total income is less than 15,000, do I need to file taxes?
So we've been saying this whole time that it's no, you do not. And I will still reiterate that. There is one small caveat to that I will say, which is that, well, two really. One is if it's self-employment income, so then yes, because if it's self-employment or ESEC income, because of that lack of a totalization agreement, you might owe Social Security tax. If it's over $400, you should file a tax return. Two is technically, if you are married to a non-US person, technically, yes, you do have to file. If you don't, you won't owe any tax, and there's not going to be any penalties, and no one's going to come after you because you'd still have that $15,000 deduction automatically, so I wouldn't worry about it. The only other time I would say yes, you have a filing requirement is, let's say your parents are still including you as a dependent on their tax return, meaning they are still saying, hey, this kid is still like living under my roof. They should probably stop doing that. But if they're doing that, then technically you would have a filing requirement.
Amazing. Okay, so thank you so much, Yaakov.
My pleasure, guys.
Amazing, fantastic. For those of you who stuck around to the end, appreciate you for coming up, taking a control of your tax life. I know that the first time I spoke to Yaakov, I was in panic because I was one of the people who didn't know I had to do this. And now we're all in this together. For those of you who we didn't get to your questions, we appreciate your patience. Again, this was recorded. We will be sending the recording along with the YouTube videos that Yaakov mentioned and a bunch of helpful information, summaries, links, etc. If still you have remaining questions, please feel free to reach out. We will do our best to answer them, and be on the lookout for a potential webinar about Israeli taxes. And I hope everyone has a great night, and Shabbat Tov.
Thank you, guys. And thank you all of you who are, protecting us and keeping us safe. It's huge. It is quite amazing. Thank you, guys.
And thank you, Sam and Rina. I couldn't do it without you, so thank you so much. And Yaakov, you are the best. I think you made it as clear as you can. And from the comments here below, I know it was very helpful, so thank you.
Have a good night, everybody.